Hi everyone, welcome to this quarterly update. I'm Sumaira Abdi and with me is our equity CIO Gaurav Mehta. So Gaurav, thanks very much. And let's start by talking about the SBI ESG PMS. And we've seen this return in quality stocks, right? We've seen a favorable monsoon, and consumption trends are looking good. How does this impact the investment strategy?
Right. So you're right, Sumaira. We've seen a return of quality across sectors. Actually, it's not just limited to consumption. You're seeing it across sectors. And if you look at the recent macro environment, it has been one where from an equity investments point of view, valuations were already a little expensive across the board. B, there was a very significant uptick in market sentiment. So the market sentiment was very stretched, and we've been talking about it through our proprietary sentiment measure, that how market sentiment was very stretched to begin with. And the third point is that of late you've seen some moderation in the overall earnings growth for corporate India. And I think this combination was very conducive for quality stocks to make a comeback. And I think that's a point that we've been talking about in most of our sort of monthly newsletters over the past few months, that such an environment is conducive for people to sort of cut down on the rampant speculative action that you were seeing over the last few quarters, and in fact focus back on the fundamentals of investing, which is balance sheet strength, cash flow generation by companies, and most importantly, longevity of profitable growth. And that in turn means that quality stocks do well. I think from our portfolio standpoint, we have anyways focused on companies which do all of these, right? Where there is a good profitability to begin with, there is a long-term longevity of high growth, and B, there is a lot of focus on governance and balance sheet aspects. So I think to that extent, we think that this environment where quality stocks do well, and people go back to investing with key focus on bottom of fundamentals, I think should augur well to an investment strategy like ours.
And all of this is happening at this boiling pot of geopolitical stress, and we're seeing this valuation gap between US and China. What do long-term investors make of it, right? And especially for somebody who's trying to time the market and saying that let me at least take partial profits off the table, is that advisable, or do you just stay invested?
I think when you think of equity markets, they're always full of some events globally, locally, macroeconomic and geopolitics, and all of that is always happening in the backdrop. So you're right that there was a big disconnect in the valuations of Chinese stocks and US stocks. I think some of that is getting addressed now. There's been some up move in Chinese equities, and I think from an India standpoint, a lot of people are worried that that is leading to the big inflow that you're seeing from FPI point of view from Indian equities. It could be the case, but I think this is more of a short-term phenomenon where, yes, people realign from a market that has started to outperform now versus India, which has been a massive outperformer so far, but incrementally showing some signs of relative underperformance. So to that extent, some near-term adjustment is natural. But when you think of it from a slightly medium to longer-term standpoint, the fact is that emerging markets equities, right, as an asset class, they had been written off for a good part of the last decade or so. And if other emerging markets also start to do well, then that will bring back focus on emerging market equities, which again, from a mid to long term standpoint, will also be positive for India being an important part of that emerging market index. So I don't, you can think of it as glass half full, glass half empty. But the most important point is that these things will always sort of work in the backdrop. You should focus on the fact that you are investing from a longer term standpoint. And what you should focus on is that the portfolio stocks that you own are these companies that can continue delivering earnings growth year after year in a profitable fashion without compromising on balance sheet. And is that something that's sustainable irrespective of what's happening in the macro environment? And if the answer to that is yes, then I think you should just shut your eyes, let these events sort of play themselves out, be patient, and keep the sort of long-term investment horizon in mind, and you should be good.
All right, and that's always an all seasons advice, right? All right, thank you so much, Gaurav.